Good morning, everybody. It's the 16th of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve. How you doing?
Yeah, all right, not too bad.
Good.
Excellent.
Um, I'm good. In case you wanted
Yeah,
to know.
I thought you might be good.
Yeah,
Um,
nice win for the Gooners last night.
it was, yeah. West Ham
Just
are
hoping.
average, aren't they? They're not massive, they're
They're not.
average. West
Yeah,
Ham
they're
are
average.
average. Yeah, well, there you go.
Just hoping I
It's not
didn't
that,
bring any Omicron home for Christmas.
no, well, that's the thing, isn't it? How many did you cram into the stadium? What's it, 60 odd thousand, isn't it?
Yeah, I think official attendance was 59,777. So
Yeah, I mean, yeah.
someone's got it there. That's for sure.
Definitely, yeah. You don't have to be a great analyst to work that one out, but
And I'll tell
yeah,
you what, they had all the COVID passes that you were supposed to have, which
they're just
the passport. No one checked.
no. It's
And
like
no one wore
rubbish.
masks in the stadium either.
No. I mean, the only one that should be wearing a mask is the referee for sending that guy off, I think.
Yeah, maybe.
No, no,
Game
he was
game
out of
was won by
control.
them. Yeah,
Yeah.
well out of control. Okay, stop with that chat because I'm sure it's not everybody's bag. But let's get
Wasn't Mike
stuck
Dean?
in.
Was it Mike Dean?
No, it was Anthony Taylor.
All right, okay. I'll let him off then.
Um, okay, so we had the Federal Reserve last night, and they've intensified their battle against the hottest inflation rate in a generation by shifting to end their asset buying program earlier and signaling that they favour raising interest rates in 2022 at a faster than expected pace. The quicker pullbacks put the Fed chair Jerome Powell in a position to raise rates earlier than previously anticipated to counter the price pressures if necessary. So he has retired that phrase of transitory and saying that it was temporary. And now, having to eat his words that it is an issue that needs to be dealt with. So the hawkish turn translated into a rally in stocks. We saw quite a significant move higher in risk assets yesterday off the back of that, with the S&P making hitting its highest price in 13 months. The Omicron situation is obviously still very much present and infects around 70 times faster than Delta. That's according to the latest studies from a university in Hong Kong. The variant is already turning London into a ghost town, and Europe's systems to allow hassle-free travel for people vaccinated against COVID-19 is at risk of breaking down after Italy and Greece imposed their own rules. So lots more issues raising their heads with regards to this latest strain, which obviously is a concern. The people of North Shropshire in England will vote in what's being touted as a referendum on the UK Prime Minister Boris Johnson. The by-election follows allegations of COVID-19 rule breaking in government and an attempt to protect a former minister, Owen Paterson, who was found guilty of paid lobbying. So a bit of an interesting point of concern, I guess, going on in the UK today, which may play into markets potentially over the next couple of days or so. That seems to be it on the news front. We did have a positive section in Asia overnight. So let's get stuck into some charts. It is another busy day on the calendar today as well. Just to let everybody know, a load of PMIs out this morning. Then we've got the Bank of England at 12 and the ECB at 12:45. So ahead of that, Steve, let's take a look at some stuff. What is taking your interest today?
Just one thing you said, S&P highest price in 13 months, or is it 13 days?
13 months, according to this, or is that not the case?
Well, I don't know. I mean, it might be the S&P
Sorry, it was the S&P's best day in 13 months.
Oh, okay. Right. Okay. Yeah. No, we're quite up, sort of like close to the all-time highs. So, and they were only posted back in November, so only like 14, 15 days ago. Yeah, we may as well start with that. No point in showing you the weekly chart because it was all about yesterday. Obviously, we can see the reaction. We had the pressure of the start of the week. People bailing out, getting out of the way, getting flat in front of the Fed, and obviously the Fed coming out with some fantastic news. They've woken up and realised that it's not transitory inflation. It's actually an issue. Well done, the Fed, for taking that long to work it out. So bullish engulfing candle yesterday. Good follow through today. Looks like we're going to challenge the the all-time highs at 47.44. So expect to see that today. My bearishness on the Nasdaq thankfully waned, and I cut out of my shorts. Well, before yesterday, probably not at the lows, but sort of somewhere around about here, about the 15,900 level. And yeah, a really nice sort of like reaction high yesterday. We saw the bearish momentum stalling, and the MACD was giving us a little bit of a hint at this. So really, level to watch in the Nasdaq is 16,460. Now, a break of there should open up quite an aggressive attack on the all-time highs up at 16,768. So really can't really argue against the impulsive move that we're seeing in the indices. Similar sort of price action, bullish outside candle on the Dow, and we're seeing the 36,130, 125, 130 level being challenged. A break of there again should open up attack on the resistance. We should see just above 36,300, and the all-time high coming in at 36,563.5 on this chart. So yeah, it looks pretty cool. However, have a little think about what the overall formation is doing. If we don't get this new all-time high, or we just get level with it, it does sort of like mean that there is potential for further downside. But I don't think we'll see this till after Christmas or after that Santa rally that we always seem to get. The timing always seems to be great. Let's go to Footsie. That doesn't seem to have had the same sort of reaction. We've got a sort of like this morning bullish star formation maybe forming, so potential for some upside, but it doesn't seem to have had the same reaction as its US counterparts. Obviously, we're talking about US interest rates, or well, US events going on that the Fed are really focusing on, and paring back on them on the buying program. So that's the first sort of like stage, I suppose, in what we're going to see over the coming year, when we're going to see interest rates moving higher from what the Fed was saying. So we'll see if that really plays out over the coming year, but definitely the markets are taking it as a positive. Bullish engulfing on the DAX as well, the Germany 40, and that's been followed through from nice upward pressure this morning. Resistance coming in at 15,865 there. So again, still seems to be opportunity to get onto this this move. On the 4-hour chart, we can see that we've broken this head and shoulder, inverse head and shoulders formation. We've broken higher from it, probably hit the measured move target, come down. We've retested that neckline, and we're projecting higher from it. So if we manage to take out the lower highs, then it does open up a nice bit of support from the Ichimoku cloud, opens up a nice platform to launch an attack on the all-time highs on that also. So on the commodity side of things, we've seen crude oil in this consolidation channel moving sideways, found support at the Ichimoku cloud down below the $70 level, 69.20. Prices reacting higher from there, and it feels like a bit of fresh air above. So taking out resistance around about 71.80 could open up the upside. We do have this corrective move after the impulsive move higher. We're looking for this ABC formation to take place. Looks like a nice bullish flag forming to really take to then challenge the around about the $75 area. There's resistance 75 cents either side of that $75 level to look at. Brent crude oil, similar sort of price action, looking like a bullish flag. The upside 61.8 Fibonacci resistance comes in at 78, just above there, and 79.60 is the 50-day moving average. So look out for that. Natural gas seems to be still under pressure. Slight positive price action yesterday. We're getting a crossover on the MACD, so potential for a little bit of upside pressure. Really need need to take out the resistance around just around $4 to sort of retest the previous support turned resistance now at 475. So a little bit of a way to go for that to happen. Initial reaction on gold was negative, obviously with higher interest rates. Really the talking point. Bullish hammer though was formed. The price action got down to the support level around about 1750 to 1755 and reacted higher, and it's back into this range that we've seen. So I do feel that the gold over the coming days, maybe weeks, is going to be pressured more, but there's obviously a little bit of life left in it, so it's difficult to argue against. It's one of these markets that can just take a bit of a flyer and explode one. Normally what gold seems to do is explode the opposite way to the short-term trend and take out stops and then go lower. At the moment, we've got 1800 level, 1795 to 1800 as a resistance. Above there, we open up a move back to 1834. Potentially 1875, but I don't think we're going to see that this side of Christmas. The 50-day moving average coming in at around about just below $1,800. So I think more really looking for this once this bullishness or the reaction from the dip down dissipates, then there is potential for further downside in gold. That's my personal feeling towards it. Silver managed to get down to 21.45, which was the previous swing low on the 29th of September. So a nice little supportive trend line to look at, horizontal trend line to take note of and form a base off. A break below there does open up the downside though. If we go back, we can see that there is a vacuum trade to play, which would take us all the way down to below $20. So keep an eye on that 21.45 area in silver. That'll be very pivotal indeed. Copper prices reacted higher as well after breaking down below the higher lows that we posted. But they did react higher again, and we're off to a good start this morning. So 4:30 trading. But again, it feels like the commodity sector will be eventually controlled by that strong dollar. Looking at, we've looked at indices. Let's take a look at cryptos. Bitcoin, I don't know, it felt like it had a bit of a turn in the crypto market yesterday. Felt like a little bit of support came in because for some reason people are looking at the cryptocurrencies and thinking there's some sort of long-term investment. Don't know really why, but we've had a crossover in MACD. That's just me being pessimistic, obviously, and joking a little bit. We've had a couple of positive days on Bitcoin. Support coming in at 45,775, and above we've got resistance of 52,000, and just above there as well. But we did see quite a positive reaction in some of the alternative coins yesterday as well. Nice reaction up higher in Ethereum, in Ripple. We also got that positive reaction, and Cardano has moved away from that long-term support that we've got in that channel coming, or that support coming in around about 120, back up to 130, and looking hopefully to challenge levels around about 140. So yeah, that's about it on the crypto space. Nice positive reaction yesterday, but overall the medium term still feels pressured.
Superb. Thank you, Steve. Great roundup as always. So let's take a look at that dollar chart that you were referring to. Interesting move yesterday on the back of the Fed statement and press conference. There was quite a significant rejection. So in the previous sessions, we've been talking about the formation of this pennant. We saw a breakout here on the 14th of December. And then we saw a fresh move to the upside yesterday, printing highs of 96.90. So at that point, you're thinking, okay, really classic sort of technical setup. It's breaking higher from a pennant, and we can expect higher prices. But that quickly reversed, and we actually closed on the lows, or pretty close to the lows of the session. We've seen some follow through selling today, down by 0.15%. So we're back within that pennant. So it's really, rejected that. That hasn't worked on a technical basis. Not all these patterns do. This is a clear sign that this hasn't worked, and we haven't seen any follow through. So I think if we do take out that 95, 97 level, which is the next level down here, the red line, then we would be looking for maybe a deeper correction in the dollar index. And clearly, given the hawkish tone that the Fed gave us yesterday, it has put some impetus into these riskier assets, and maybe that will hold until the start of next year. Typically, this time of year, we do see it being a pretty good time for assets in general, particularly things like equities. So maybe we will see a shunning of the US dollar and other riskier assets, safer haven assets until maybe next year. But in terms of a corrective move, I'm really interested in this level that I've got highlighted here in this rectangle as a level of support. So we've got the lower end of the bullish channel. We've got this horizontal line, which is relevant from these highs back here in September. And we've also got a 38.2% fib level at 94.47. So a
That sets
correction,
up a nice double top formation as well, Joe.
a double top or a
Double
double.
top, yeah, no, double top from that.
Right. Yeah, I see.
Yeah,
Yeah,
I really like
potentially.
that. Yeah,
So yeah, further case there for maybe a short-term correction. I think it will only be short-term. I still think the underlying
yeah.
bullishness is still there on the dollar index, and we'll just see really a nice pullback to this kind of level, a reset, a consolidation, and maybe a continuation higher. So short-term, we may see people staying away from safer haven assets like the dollar index. So euro US dollar that broke down yesterday from this what maybe looked like a pennant formation as well in the daily chart, but quickly reversed that, as you can see, closing back within the pennant, and then we're backing that up with further gains today. If we see a break to the upside, then we'll be looking for a corrective move to the upside to around about 115.25, in line really with this downtrend. But we've got some horizontal resistance here, which I think we could maybe target. And again, I think it would just be a case of a bit of relief for the end of the year, but then we will see a resumption of the selling at some point, targeting these levels we've got down here at 110.58. If we take a look at cable, that's had a decent pop to the upside today. This 38.2% fib level has worked like a dream at 131.65. And why it's relevant, let me just scroll out a little bit further from those lows that we posted in March last year down here to these highs that we've posted a double top with the latest high being in June. We've seen a pullback to that 38.2 and it's worked perfectly. We are expecting to encounter some resistance, I think, between 133.53 to 134.15. So I'm not expecting any kind of huge move to the upside. I think it will be capped, but in the short term, it does appear as if there is some interest in driving this a little bit higher. So do keep an eye out for that. And of course, we've got the Bank of England today, so that may play into this. One of the other sterling currencies I was looking at was sterling yen, and it's really interesting here because it's got a massive level of support between 148.52 to 149.05. And as you can see, it's held spectacularly well, and we've seen a decent push to the upside. Yen has been very weak of late because people have been avoiding it as a kind of a safe haven asset, which is often referred to as. But yeah, nice move off of that support zone, and looking as though that could potentially result in an extended move higher in the short term. If we take a look at Aussie US dollar, that has continued to move higher. Again, being attractive from a risk perspective. It's broken above this resistance here. It's horizontal resistance at 71.70. Looks to be pushing on from here. I did talk about the idea of maybe a large top for me here. This being a left shoulder, this being a head, this being a right shoulder. But and if we looked at that on the sort of basis of this being the neckline, you could argue that it did actually break. And maybe what we're seeing now is a retest. But given the strength that we've seen over the last 24 hours, it might not be as straightforward as that. So just a watching brief on that for now. I was also looking at dollar CAD. That was quite interesting because we have rallied into quite a significant resistance. We've got a previous swing high from back here in August at 129.49. We came in just shy of that yesterday on the initial dollar strength, but then rejected. So maybe we could see a bit of a pullback in that in the very short term as well. There was something else I think I was looking at to highlight a 38.2% fib, but I'm not sure what it was now. Euro sterling pretty much still the same, trading within that bearish channel. So yeah, I'll leave it there, and we can move on to the next part. which is the gun to the head challenge, which we didn't do very well at, Steve.
No, pretty poor
I mean,
yesterday.
FOMC didn't help. We were, I think, looking both pretty good ahead of the FOMC, and then it just took us out. And that's always going to be the risk when you've got these major risk events that are occurring throughout the trading session.
Okay.
So 2 stop outs, just to confirm.
Yeah, don't want to dwell on it too much. Let's. I'm sort of thinking, right? Okay, the European markets have rallied into this news as well. But once this dissipates, this euphoria dissipates, then maybe we'll get a little bit of back on the old treadmill of it's not looking so great in Europe malarkey. So we've got basically quite a nice trend line resistance coming in there. Let's turn it into a red line, and we formed a bit of a doji candle on this hourly chart and rejected. So I'm always looking for opportunities to fade the indices and sort of take advantage of the short-term pullbacks that we get, because we do get a lot of them. So getting short here at 17.25, because I like to do round numbers. 15.775, so it's a 50-point stop, and really looking for, let's do another 5-to-1 risk reward all the way back down to this support level here. That's me on DAX. Unfortunately, I've got to shoot onto another call now, Joe, but that would be me. My gun to head challenge is that, getting short of DAX, 50 tick stop, 250 tick target.
Lovely. I like that, Steve. Looks good. I'll wrap up and
All right. Cheers.
catch you later.
All right, mate. Bye.
Bye. Cool. So I'm going to take a look at NASDAQ. And so, I mean, I just talked up how these riskier assets like equities look pretty good. And we may see a continuation of the move higher persist into the new year. Apologise for this sort of drawing that I've got on the NASDAQ chart, but really what I'm trying to highlight is that there is maybe some rounding sort of price action taking shape, which would be indicative maybe of a short-term top. If we take a look at price action in recent weeks, you can see it has been pretty sideways and pretty choppy, and therefore obviously quite difficult to call. But if you squint closely, you can see that there's a number of highs here that seem to be capping the upside. Which for me is quite interesting. And obviously, if you are going to take action, assuming that this is a resistance line that's going to hold, you want to be trying to get in as close to that level as you possibly can. Obviously, if we get a break, then that would prove that we're wrong, and then more than likely we're going to go on and make new highs on the NASDAQ. So looking at this on the intraday chart, this is the hourly, this is the levels that I was referring to. As you can see, we clearly have seen this do a job as resistance at 16,438. 1, 2, 3, 4, 5, 6 occasions we've tried to overcome that level and failed. Another one lately, we're posting a bit of a red candle at the moment on the hourly. If we get across below that 10 period moving average, which is the pink moving average I've got here on the screen, then that could lead to a reasonable correction lower. So for me, I quite like the profile of this. I think from a risk reward perspective, it really looks quite exciting. So let's just get a visual up on that. So we're going to sell at 16,377, and we're going to put a nice tight stop above these levels here. Let's just go there, 16,490. So, it could easily have a little bit of a look above that and stop me out. That's often the way markets go. But if it doesn't, then I'm looking for a correction all the way down to this kind of level down here, which is the previous lows that we posted in the early part of December. There probably is going to need to be a catalyst for that to occur, but I'm looking for 7.6R on that. A 5% move, probably out of the question today, given that we've had one of the major risk events out of the way today in the form, yesterday in the form of the FOMC and the Fed. But you never know. You've got to be in it to win it. And from a risk reward perspective, I really like the setup here. We're getting in close to the resistance level with a nice tight stop, but looking for a really punchy amount of reward on that if we are correct. So that's my trade for today, targeting 15,543. Now back in terms of what to expect today. As I mentioned earlier, it's a pretty stacked calendar today. Between 8:15 and 9 a.m., so we've already had these out. We've had the French and German PMI numbers. We've also got the UK PMI number, which is due out in 8 minutes, so 9:30 UK time. Services PMI expected to fall to 57.6, and the manufacturing PMI to drop to 57.4. Then at 12 p.m. today, UK time, we've got the big one from the UK, which is the Bank of England rate decision. No change in rates expected, as the return of some COVID restrictions have prompted the Monetary Policy Committee to revise its views on the economy. So it had been touted, well, pretty much for weeks now, that the Bank of England would be the first mover in terms of interest rates to try and curb inflation. But due to the restrictions that have been put in place on the economy in general because of the Omicron variant, it's likely that there is no action going to be taken, but they will refer to what they're intending to do going forward. Then at 12:45 UK time, we've got the ECB meeting. The rates are expected again to remain unchanged, but there'll probably be chat about the bond purchases program that's ongoing and the asset relief programs. 1:30 is a press conference, so it's likely to be a lively couple of hours really in markets. At 1:30 UK time, we've got the US initial jobless claims. Claims expected to rise to 215,000. Then at 2:45 UK time, we've got the US services and manufacturing PMI data. So plenty to keep us on our toes today. So do be careful if you're out there trading, and of course, as always, use appropriate risk management if you're involved in the markets today. That's it from us. We'll be back tomorrow morning to wrap up the week. Hopefully everybody has a great day, and until then, see you soon. Goodbye.